Hi everybody, Brian from Bearable Traders here. It's the weekend, obviously, September 17th, Saturday, and hope everyone's having a good weekend. This is a weekend video. We'll go over what happened last week in the markets, and it was a crazy week, another one, and we'll just take a look ahead and see what we got coming this week. And we've got the big Fed meeting coming up, of course, so let's get down and talk about it. And so let's start out with what happened last week. Quick review. Of course, the markets headed lower after Tuesday's CPI number was reported, and it obviously came out a lot hotter than most had anticipated. Inflation still seems to remain stubbornly high, meaning that the Fed is still going to be hawkish in terms of their interest rate hikes, and so of course that's, or at least that's the way the market traders and investors took that number. And I had mentioned this in last week's video to watch out for that CPI number. I thought that was going to be a huge influential number, and it was why I was basically flat on my swing trades going into this report, because I thought, one way or another, if it came in under estimates, the market would probably rip, so you didn't want to be short. On the other hand, being long and waking up and seeing the indexes down so much wouldn't have been good either. So rather not play roulette with my swing trades. And anyway, it turned out didn't lose any money, but obviously didn't bet that it was going to be hot. So Thursday evening, of course, FedEx came out and poured more cold water on things by coming out early and reporting some pretty bad earnings or expectations, and warned about a global recession that they seem coming, and sort of that just fueled more economic concerns and about a slowdown. And of course, the market sold off again on Friday. So all the indexes down on the week. You can see there. It's amazing. We've been 2 weeks ago we were up, or down, I should say. A week ago we were up almost that amount, and now we're back down again, almost even more. So still in a bit of a real volatile market here. Of course, a bear market tends to be more volatile. And as far as sectors go, energy, healthcare, financials, they were all red, but they lost the least amount. Certainly materials communication services, technology were the big losers on the week. And with the concerns about inflation, the 10-year Treasury note edged higher, and the 2-year really took off here. So it again, pricing in higher expectation of higher interest rates, and the yield curve obviously still inverted there. The dollar, with the increasing interest rates, increased also 0.72% this week. And Bitcoin, of course, just volatility, same as the market, and it's dropped back below 20,000 as of Friday night. Anyway, that's the last time I looked at it. But yeah, Bitcoin just volatile like the rest of the risk-on assets. And before we get into taking a look at some charts here, this is the quick ad section from my book on Amazon, new book, Profiting as an Active Trader, Rules, Strategies, and Routines of an Active Stock and Option Trader. So if you want to check that out, it's on Amazon. And let's skip over here and start looking at some charts. And we can start with the 2-year Treasury I mentioned earlier. It's starting to listing was up on the week, and it's actually starting to break out here. You can see this was a prior high, 345, and we've really started to break to higher highs here as we factor in more aggressive Fed interest rate hikes coming, and again the 2-year reflecting that. On the shorter term, the 10-year, we actually came very close to this high back in June, 3.49. We're at 3.45 right now, and it looks like it's on the verge of breaking out as well. So we've had a pullback and a nice reversal off, and heading higher here, and the momentum indicators are all indicating that possibly we are going to continue to see higher rates. Some people think that maybe that could be a sort of an area where we might start to top out here, but Again, no sign of that on the technicals on the charts. Transports, of course, they took a huge hit on Friday because of the FedEx uh, early guidance and warnings, and so we finished right down at support here. There was some question about whether FedEx was obviously some of their business is suffering, but whether it wasn't partly a FedEx issue, execution issue, because everybody's pointing to FedEx as being a company that's not as well run as, say, a UPS, and expenses are much higher. So, question as to whether that was partly a FedEx thing that came out on Thursday night and impacted us Friday. So you can see here we are on the transports. We're right back down to June lows here. And this will be a critical area to see if we can find some support here. The 200 days a little bit below it, but it's we are still in a downtrend. You can see the trend. Every high is a lower high on the bounces. The Dow. All I can say, and I'm going to say this about pretty much all the indexes, we were well off the lows of the day on all the indexes. So we had the gap down, sold off, but then we did manage to make a nice comeback here, and we are, coming down and testing some of these levels, low levels from June. So maybe we're due for another bounce here next week. Again, on the week, we do have a little ways to go here, down around 30,000 on the Dow to get down to where about this 200-day moving average will meet it, and back to these June lows here. But again, series of lower highs. Every pop is a lower high, so definitely still in a downtrend. And you can see here again the same comment, down on the day, sold off, but we came back. So every down day is not equal, not created equal. And you can see to me, this is a down day that has some positive, some silver lining, let's just say that, around the clouds. And again, we did lose sort of this area here, which was this sort of 295 level, which is an area of support, 290. We're kind of at an area right now. And if we lose that, it'll be 280, which will be, coming down and maybe testing these June lows, July lows. The SPY, again, same comment, gap down, but finished up prior, from compared to where we opened on volume. So maybe a bit of a silver lining there. On the week, again, another down week. See, we had a down, 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 and a big rally back, and then down this week. So an engulfing candle here. So that's not a good sign. Again, same comment with the doji here, well off the lows of the day on the IWM. Again, engulfing candle and lower, so not necessarily a good sign there. The VIX really came off on Friday. You can see here as the markets came back, the VIX dropped off. VIX often drops off on a Friday going into the weekend, but you can see here we're well off the highs of the day. So again, some topping pattern here. VIX is kind of indicating maybe we're due for another bounce. The dollar actually was strong at the open. I noticed that on Friday, and then sold off during the day. Came back up, but it still was up on the week. So after this big drop, where the European unions and some of the other central banks had started to raise rates, but the dollar sort of came back there. Bitcoin, again, we're back. When I looked at it last night, we were under 20,000. I see we're over 20,000 now. But again, Bitcoin just, really erratic, just like the markets. So let's quick look at some stocks and continue to watch. I always like to watch Apple just because it seems to be the sort of the face of the technology side of the market and the market overall. Quite often you'll see the Apple and SPY kind of move together. So anyway, again, same comment as the indexes, well off the lows of the day. We did manage to come back. We did gap down, but came back and held this 150 level, which I think is pretty critical here. So maybe we've put in a sort of temporary bottom. Big volume on Friday on Apple as well. Maybe the momentum The stochastics are starting to turn back up again here. So again, maybe due for a bit of a bounce. So you could sell some 150 calls here, and maybe take advantage of, or 150 puts, I should say, and take advantage if there's a bounce there. You might end up owning it at 150, but could be a sort of temporary bottom there. I bought some of this AVYA, bit of a speculative trade. It seems to have held up fairly well during all this volatility, and had a nice move up on Friday despite the market overall. And it's got about it's got over 30% short interest, which makes me quite interested. So we filled this gap back here. We've been filling that gap, and then I'm looking at possibility of it getting, maybe to 270, and then $3 would be another area where we'd see some resistance. But if we get a real pretty decent short squeeze, you can see here volume started to pick up on Friday as well. Momentum turning to the upside. So I like this one. And again, speculative trade, sort of 150 will be the place I'll stop out. Again, Disney, a bit of a face of the market trade. You can see here we've filled this gap that we put in. And again, Disney, probably a decent long-term trade. A lot of volume on Friday too on this selling. So again, maybe a sort of a short-term bottom has been put in on Disney. EWG, I'm watching this one. This is the Germany MSCI ETF. Again, we've put in kind of a bottom here. Looks like it could be due for a bit of a bounce. So it's definitely finding a lower bottom, and this could be again, I'm looking at that as more of a long-term trade when we get past all the other ugliness in Europe. LVS, again, looks like it's trying to, keeps challenging 40 and rejecting it. But on a weekly, we had a sort of indecision doji, but I'm kind of liking the way it looks. If we can get past all these lockdowns in China, because a lot of the LVS, it's not really a Las Vegas Sands play anymore. It's more of a Macau play. But again, if we can get past all these lockdowns, this could come back up again. Again, bit of a longer term hold if it can break through 140 or 40. Again, I'm just watching uranium here. This was a pullback. We had a pullback on uranium with all the other energy stocks selling off this week. Still watching PSTG. This is, again, a lot of the alt energy stocks got hit with the rest of the market, despite the fact that things look fairly positive for them with the build back, or with the, I guess it's the Inflation Reduction Act. But yeah, there's money going into these alt energy plays right from the government. So I think a lot of support there. And again, uranium really sold off during this week and came back, but I'm still holding some there. So that's it. All right, so let's wrap things up for the week of September 19th. Let's take a look ahead. Here's where the indexes are right now, roughly, and levels of support and resistance that I see. We're kind of middle of this support and resistance area on the Dow. Roughly same with the Qs. We've already lost some pretty key levels that I had flagged last week. Again, the SPY, we're getting close to another support level here, and the IWM kind of right in the middle right now. So what have we got coming up this week in terms of economic events? We've got a lot of housing stuff coming out this week. Tuesday, housing starts, building permits. There's more stuff, I think, on mortgages on Wednesday with existing home sales as well. Of course, we've got this Fed meeting coming up, much anticipated Fed meeting. Questions about whether there will be a 0.75% hike or 1%, if they're going to go heavier based on that last CPI number from last week. So we'll see what happens there. But I am most expecting this another 0.75. And Stitch Fix for earnings, we've got that on Tuesday. It's a relatively light earnings week. We do have some interesting ones. I would say Costco is going to be interesting Thursday after the close. FedEx already kind of front ran their official earnings date, and with that release on Thursday night. So on Wednesday, we've got Lennar and KBH or KB Homes. That'll be, again, sort of a read on some housing. And TCOM, obviously Trip.com is a travel stock. So Darden Restaurants and Accenture on Thursday. So a bit of interesting earnings, not a lot, but we've got another week or two before we get back into earnings season again. That's it, everybody. Have a great rest of the weekend. Hopefully we'll see you Monday morning, 8 o'clock live on YouTube, pre-market show. We'll be going through all the various events and looking at what's moving and shaking in the morning. And then, of course, our members will be trading at the market open at 9:30. Have a great rest of the weekend, everybody, and we'll hopefully see you Monday morning. Bye for now.